Hello everyone, welcome to the Ichimoku daily analysis for the US dollar index for Tuesday, October the 12th, 2010. Well, a series of red and green candles over the last few days. Previous trading day we had a fairly large green-bodied candle, and it did offer some potential for a rally in this market, and that's exactly what's happened. We did have the market change trend. That green candle denoted the buyers being in control, showing a good commitment on the day, and also denoted a bullish, or something similar to a bullish engulfing pattern, although the previous first time frame trend had actually changed to up at the time, and that candle was a down candle, so a one period down candle is not very strong, but looking at it in the context of the previous trading throughout this very strong downswing, then it probably was just as important as a bullish engulfing candle or a bullish engulfing pattern. So this market has changed trend. The trouble is, though, the bulls haven't gone on with it. We have a red-bodied candle, so we have the the sellers making net bearish progress, so it's not really what we want to see as a new first time frame uptrend develops. We would like to see the bulls making net bullish progress, or the buyers making net bullish progress. We also have a fairly small bodied candle, so we'd like to see a larger body candle, and that body to be positioned higher at the top of the range of the candle. Now, we also have this large shadow on the top, and that represents downside price rejection, selling coming in, and the sellers have actually taken control. So the short-term dynamics in this market are not supporting the change of trend to the upside, so very strong selling coming in, and it means that the buyers lost commitment that they had as they were trading the market up around this area of resistance that we highlighted previously at 77.96.5. Coincides, or 78, coincides with the area where the Tenkan-sen is trading as well, so that had an added influence as resistance for this market. It's a very important level. We can see here on these at these candles that there was downside price rejection coming in too when the market traded up here. So once again, we've seen the influence of all of this selling that we've seen fairly recently. Now up above here we have very strong resistance all the way up to the cloud, up around 82, 83, so very strong resistance overhead. Now in Ichimoku chart terms we are trading down below the cloud, so we are looking a little bit overextended. The market is bearish in the overall big picture terms and looking overextended, so there is still a chance that the market will try to revert back to the means as represented by the Tenkan-sen, Kijun-sen and the cloud. Now, the market is still trading below the Kijun-sen and Tenkan-sen, so the market remains bearish in the medium-term and fast-term timeframes, trading a little bit closer to the Tenkan-sen, which represents the fast-term timeframe, but still just down below there. Now, the market did revert back to there. It did test that mean and was rejected from there, so there may be a chance that the market will continue trending down on its way. That's the first area that we do look to for resistance in a fast down trending market. And quite often it does tend to be an area where we do see downside selling pressure coming once again. If we look at the Kijun-sen, that Kijun-sen is pointing flat, and quite often price action is attracted back towards there when it turns flat, and that's exactly what's been happening here. In the candle from 2 trading periods ago, we saw the trend change to the upside, and then we had a change of trend immediately again to the downside, but now once again today we've had the change of trend to the upside. So if the market can trade up through this 77.96.5 area, 78 area, then there is a possibility that we can trade up to around 78.94 or 79, and that's because of this ability of markets to mean revert. So there is a strong chance that that can happen, although, as I've said, the short-term dynamics are not favouring that at the moment. What we want to see is bullishness coming in. So if we do see a bullish close up above 78, then there will be a good chance that the region around 79 will be tested in the next few days.